Hi, thanks to all of you for joining us after lunch and for sticking with us for these very important conversations talking about retirement savings in America and the problems and obstacles around that. We are excited and honored to have Jamie Dimon, CEO of JPMorgan, the largest bank in the United States, and someone who has seen the U.S. economy in all the various fits and starts during the financial crisis, went through the last banking crisis in the spring, a little bit bigger this time around, and we're glad to have him here to talk about these issues. So, Jamie, you've talked a lot about pro-growth policies in your annual letters and how the U.S. can stimulate its economy and bolster growth. You employ more than 300,000 people at JPMorgan. How do you see this retirement savings crisis issue for you and your bank and your employees?
Yeah, so first of all, welcome everybody. Thrilled to be here. Larry, I don't know if you're still here, but thank you for inviting me. And look, you guys have been hearing it all day because I've been getting notes from the meeting. I looked at some of the stuff that BlackRock wrote. We should have defined benefit plans again. The reason we don't is because we changed accounting in a way that made all companies shed it. We should change that back. We should obviously have affordable 401ks. We should obviously have training at K to 12 about how, just basic financial matters. And we obviously multi-employer plans and corporate state pensions obviously should be fully funded. They've been bailed out multiple times by the federal government, which you all paid, $50 or $60 billion for. And these, I don't know why we can't get basic stuff done. I find it very frustrating. And this is like one policy element. And by the way, there's some great ideas from around the world. Australia has the superannuation funds where I think they take a certain amount of your income, and it's a long-term fund. And Sweden has an account where you could put in quite a bit of money, and you pay 1% a year, but you never pay capital gains. So it's fostered a lot of people investing in those funds. There's a lot of things to do that would just be great for our citizens and great for the economy because put more capital to work, and we just simply don't do it.
Well, what does that mean in particular for small businesses? Because we're talked a lot about small businesses here, how they have less of a safety net both for the small business owners and their employees. You've seen, in terms of your customers at JPMorgan, what more could be done here in Washington for those kinds of...
I think some of the things I mentioned would be good for them, better multi-employer plans. We have a thing called the Everyday 401k, portability of 401k. Just make it easier for them to start small plans and actually aggregate them like a multi-employer plan with the proper tax benefits. I mean, that's just the best start. And so you're absolutely right. This small business is harder for them and harder for their employees on both the retirement side and the healthcare side. And it's something we should get doing a better job at.
Well, in terms of something that should be done here in Washington, I know I think you've been tracking the Supplemental Security Income Savings, eliminating the Penalties Act, and this is for particularly employees with disabilities not getting their other benefits cut off if they do want to save for retirement. And I think you know this sort of personally from some of your employees. Why do you think an issue like that is so hard to move forward in Washington when it seems like a no-brainer?
Washington, first I have a lot of stuff going on, but it's a great story. And we have a special program to hire disabled who want to work. But this woman's in a wheelchair. She needed basically full-time care when she was at home, but to get Social Security benefits, I think Medicare benefits, if you have a certain amount more in your 401k, I think the number's like $12,000, they go away. And so instead of working and saving some money, the person has to go home so they can get their full benefits. And so I do believe there's a lot of support to changes in Congress. I do believe there's a bill already in front of them they hopefully will vote for.
Yeah. And in talking about retirement savings, obviously we were hearing earlier about people's 401k plans being hit with the market gyrations of these last few weeks. People will feel good about putting money away for their retirement if they feel financially healthy right now while they're working. what do you see in terms of sort of the broader economic outlook that may be affecting, how people see how much they actually want to put away?
I mean, I don't know the answer to that because you're talking about recent information, and I hope people don't save money that way. I mean, if you were saving for your retirement plan, my advice would be you save all the time. You don't save because the market's way up and the market's way down. Just try not to do a lot of market timing or guessing and things like that. And I think most people do that. I know there's some people who hesitate when they get scared. But I think far more important in terms of the economy is do they have jobs, their wages going up, those things, not they putting more money in their 401k.
Yeah. Well, so talking about the broader economy, we've seen...
We do some for 401k, but not a lot of companies do, which is, when I got to JPMorgan, I was asking questions about the 401k. We have, in the United States, like 75% of the people in it. There were like 40,000 people not in it. I started asking, well, who are the 40,000? Why aren't they in it? As it turns out, the 40,000 were our lower paid citizens. So our lower paid employees were not getting the match because they didn't have the money to put into the account. And so we kind of changed it. We automatically deposit, if they make below a certain amount, like $1,000 now in their account to get them started, whether or not they put in their own money.
Yeah, well, for some of those lower paid people and for Americans in general, we've seen consumer sentiment recently fall a bit. The recent jobs numbers, were a little bit tepid compared to expectations. Where do you see the economy headed now, given all these uncertainties around tariffs and the sort of future trajectory of inflation?
Yeah. Well, it's obviously very hard to answer a question about forecasting the future, since I rarely see people do it accurately. I mean, I think the geopolitical stuff is paramount for the free world. Far more important than what happens to the economy in the next 6 months or so, or the next year or so. And the economy is a little bit like the weather. It reacts to tons of different things. And so, but obviously, if you look at the economy today, you see a weakening. The consumers are still spending money, jobs are still plentiful, wages are still going up, CPI is kind of leveled off a little bit, but you do see a weakening in sentiment, certain type of spend that people consider more discretionary. And what changes that, it's hard to tell. I don't think the average American consumer who wakes up in the morning and goes to work, which are like 175 million of them, changes what they're going to do because they're reading about tariffs. So I just question that a little bit. I do think companies might have, and that people, maybe some people are stockpiling certain stuff over time, but it may be that adds to some negative sentiment out there.
Yeah, well, for companies, and given all the clients that you consult, in terms of business investment, in terms of where they do want to put their capital, because they are thinking about 1 year, 5 years down the line, what are you hearing from your clients?
Yeah, so if you took a spectrum of clients, 100, there are obviously some 25, 30% who are maybe changing or hesitating because of some uncertainty about future laws, future requirements, future regulations, future trade, future tariffs, stuff like that. It doesn't affect all of them, but you clearly do see that a little bit. Uncertainty is not a good thing. There's always some, by the way, so whenever you measure uncertainty, you gotta say relative to what, but you do see a little of that hesitation taking place. So the more these things get settled quicker, I think they'll be easier for people to kind of move on.
And what has your message been to the administration? A lot of CEOs were at the Business Roundtable event last night. They heard from the president. What is your message to them to sort of instill confidence and certainty in this economy?
Yeah, so my message to CEOs, a message
the CEO's message to the president.
Yeah, I'm not going to speak for other CEOs. I mean, a lot of us are going and learning all the people now. Some are new. So we're getting inputs, trying to understand what they're trying to do, how they're doing it. But I think most of us, we like the fact that it's pro-business. That's a very positive. We like the fact that they're talking about a tax bill that won't raise taxes. That's a positive. We like the fact they talk about growing the economy. But the tariff side caused a little bit of uncertainty. But the other stuff, we talk about, and they all get the message about how you go about these things and why you go about them. But the president is clear, his staff is clear. They're willing to take some short-term pain to get to the right long-term output, which is, by the way, what I would say at JPMorgan Chase. That's no different than I tell my people every day. We're going to do the right thing no matter what, and if it hurts a little bit short run, that's not the point. And so So we'll see how it all sorts out.
Yeah. So you think there could be sort of a better place as
Sure.
long as this is short term?
Sure. When you look at, and I know there's press over here, so please listen. Okay, they're always looking for the binary, unnuanced answer, which there is not. Countries trade with each other. Countries have tariffs on each other. They are not always equal. America actually has higher tariffs on our stuff that we overseas and have come in here. That's a fact. It's different for every country. So if you're actually going to analyze it, say, where's the unfair part, about reciprocal? It's not reciprocal. And, you could argue it should be reciprocal, and you could argue there are other unfair trade practices. Like, we do business all around the world, and yeah, there are quite a few. And there are quite a few here, too. So it's not a one-size street, but you should look, if you're responsible for trade, you should look at where is it fair, where is it not fair, what should I change, what shouldn't I change. It's not a binary for or against. And I think you have to be very careful about acting like it's a binary issue. And the one binary issue is, caused uncertainty, particularly, the on, off, large ones. What's the point? The other one is there's special ones around national security, which the country should do. Now, you could debate what that means, but we need our own access to rare earths that are secure. We need our own access to penicillin that's secure. 100% is made in China. So it's perfectly reasonable that among one of the solutions to that, if you're going to try to fix that, you're going to do one thing. You're going to do tariffs, you're going to do grants, you're going to do supply chain lines, you're going to do financing, but if you want to fix it, and you should fix some of these things, you're going to have to do some of those things, and it could become part of a negotiation with another country. So you can work it out. But these are complex matters, and I hope they get it right.
No. So let's take China. The first Trump administration did manage to come to a trade deal with them. Are you hopeful this time around that it could be worked out as well, just given the past relationship?
I think so. I mean, when you listen to a lot of the administration officials, that's their goal, is to work out a reasonable relationship with China that protects America and that's fair. And remember, to do that, and this is where some of the complexities come in, it's not just what you do with China. So if China is moving some of its products and services through other countries at a discount, so it can be sold here under a free trade agreement, that's not fair. So, there are all these things, and I wish the press, when they write about it, what you should do is take one country, look at all the various things, understand the issues, and then write the article.
Just in case you didn't hear him. Well, speaking of China and sort of the investment environment and sort of the broader global economy, we've seen sort of the opposite problem there with, concerns about deflation. We haven't seen Chinese President Xi Jinping pull the trigger yet on sort of a big stimulus. What are your worries about growth there and how it could possibly blow back on America?
I'll let the Chinese worry about their own growth problems. Look, every country has issues, okay? And you've seen them there. I don't need to repeat them. They have other stuff maybe you don't think about. Like they import 10 million barrels of oil a day. That's a lot of oil, and we import basically zero, a little bit from Canada, but only for how it gets refined or something like that. And so, they have a very complex neighborhood. We have a good neighborhood, Atlantic Pacific, Canada, Mexico, no wars. They're having border skirmishes with India today. And so I think you got to put it all together. But at the end of the day, whatever those agreements are with China, they should also make America better, safer, more secure, not necessarily against them. They don't have to be constrained. But you don't want to do things that help them, build their military or something like that. So they've changed how they look at the world. It's more about national security and what China's objectives. They use the country as a whole to accomplish their objectives, and they're quite smart. And I'm not mad at them for that, but I do understand that. Sometimes I always read that they think we're weak and lazy. Well, that's not true. Look at how hard we all work. Go to any city in America, people get up, going to work, innovating, and stuff like that. What is true is we're stupid and uncoordinated. Okay, that is true. And that, like sitting here talking about this problem, I mean, it's just one more example of why can't we just be better than that? And so they have some of that too, by the way. They have a huge retirement problem. I mean, I can go through it all. So
their demographics.
And their demographics is a huge negative, yeah.
Yeah, well, and speaking about innovation or maybe the lack thereof, wanted to turn to Europe as well. their social safety nets are better than what we have here. But in terms of growth, in terms of innovation, we just saw, the ECB, the European Central Bank, cut rates again. They lowered forecasts again. What are your thoughts about European
You made a statement
growth?
I wouldn't totally agree with, that their safety nets are better than here. They are more expensive, but you get a lot of complaints about the healthcare system. If you get certain types of illnesses, you will not be fixed at all. Like, not all. It's just you're on your own, like lung cancer, or in certain countries, something like that. And also, if they hurt the country and they hurt growth, actually, it's hard to say they're all good. So even when you look at things like that, you should ask which ones work. Now, we travel around the world, and one of the things, the benefit, like when Larry does it too, you learn an awful lot about who has really great programs that incent work, protect the sick, the old, the poor, as opposed to disincent work, and then it's just giving a lot of money out or something like that. So I think Europe knows this problem today, okay? And and they're swallowing it hard right now, but I think it's good. They recognize they need to do more about military, on their own military, okay? I think we should be their ally. I don't think we should leave NATO, but they realize they need to do more. They have to do more. They must do more. They got to do it soon. And of course, American presidents, even before President Trump, were complaining about that. Yep. But that is true. And the second is that their own economy is being crippled by their own rules, regulations, requirements, and the fact they didn't finish the EU. So when you trade among the EU nations, it's like going to a different nation with tariffs and trades and rules and regulations. So you don't have large consolidated industries, which are good to be large and consolidated because they reduce the cost of things for people. Think of banking, telecom, chemicals, and so they need that work. Draghi wrote that report. It was spot on. They need to do it, and you have new leadership. So I think Macron is as bright as they come. He's very French. He wants to do French things the French way, but he understands business. He reduced their tax rates. He improved their innovation. He changed the labor laws so there's more flexibility, which means more people get hired. Now you have MERS in Germany, who, I thought he made a very bold decision the other day to immediately say, we're willing to spend more money for defense. They used to cap their debt to GDP at 60%. And you have Keir Starmer in the UK, who says a lot of the right things, in my opinion. If those three get together, they got to fix those two things for Europe and strengthen Europe. And we should help. We should be their ally in doing that. We should be their friend in doing that. Now, we have trade issues with them, but I also think keeping the Western world together, military and economically, is really important.
So with those leaders, you're more hopeful that Europe can sort of get its act together?
Absolutely. They really have to. I mean, I don't think it'll be a very bad thing if their GDP per person has gone from 95% of America to 65%. I mean, you can see clear to 55 and 45. The European Union will fragment. If it fragments, you're going to go back to kind of a pre-World War II type of globe or something like that. So we should be very careful about that kind of fragmentation. And the other thing, again, for the press in the room, we talk regulations.
There's only one audience.
We're not talking about getting rid of regulations. We need consumer protection. We need food protection. We need proper regulations. But God knows if you understood the bureaucracy, the litigation, the unfairness, the duplication that takes place today, it's extraordinary. And we're going the way of Europe. And folks, you don't want that. And so I think we have to be very careful. There are lessons learned what other countries have done in history that we should avoid.
Yeah, well, speaking of regulation, there's been a lot of churn on sort of the bank regulatory front of what could happen there. We've seen the vice chair of supervision at the Fed, Michael Barr, step down, but no one has replaced him yet. There's a lot of talk of whether certain agencies should be combined in terms of sort of the alphabet soup of the FDIC, the OCC.
They announced today that Mickey Bowman is going to be appointed.
Yeah, finally having that position possibly filled. I know you thought the pendulum swung too far in the last administration. You saw, obviously, for JPMorgan, the GSIB surcharge for the systemically important banks. Are you worried about the pendulum swinging too far the other way in terms of...
Not even remotely. And the pendulum didn't swing too far. The pendulum was swinging in one direction for 15 years. And I don't I don't mind regulations, and I'm not going to, I have the spaghetti chart I published that showed all the new regulators and all the cross regulations, and it's absurd. It's balkanized. Even the regulators tell you you can't run it that way, and so it should be simplified. I'm not saying there should be one. I'm not saying you should get rid of consumer protection. When you look at consumer protection, we have consumer protection from the SEC, from the OCC, from the Federal Reserve, from the CFPB. So obviously you want proper regulation, but what I am most disappointed about, and we have GSIFI, SLR, ESLR, TLAC, Resolution Recovery, CCAR. CCAR is 80,000 pages long of garbage. Resolution is 80,000 pages. It will never be used. We've just been
the living will.
And people say, well, the banks have reduced. They haven't reduced regulation of the bank at all. And if you look at the chart of capital, it's been going like this every year. And there's a right number, and we have a job to grow the economy. But the biggest regret I have is that they never took the chance to, which you should do, everyone should do, is take a step back, look at the whole, ask whether it works. They never did cost-benefit study on private credit, on mortgages, on how you're going to reduce loans and how you're going to reduce liquidity. Never. They never looked at what they wanted the intended consequences to be. They never really looked at what's regulated, what's not regulated. They never looked at what's fair or not fair. So products out there today, we have social requirements, AML requirements, insurance requirements, reporting requirements, you name it, zero. Is that what you wanted? And so I'm just saying, take a step back. In my view, had we done some small modifications, Silicon Valley Bank and First Republic never would have happened. I think we can change the rules and regulations to create more liquidity in the system, because you're going to have a lot of volatility one day when, quote, ample reserves disappear, by the way, because they've really hampered the ability of market makers to make market. At the point in time, we'll still be loaded with money. Loans to deposits have gone from 100% to 70%. The system's probably safer. Is that what you wanted? What you really want, in my view, is a system where banks can go bankrupt, but we don't have to have hysteria every time a bank goes bankrupt. You want that to be a normal thing. So it is time to step back, look at all of them. And like a lot of things, if you clamp this down and bump this up, you've done nothing. You've got to look at all of them and then have a rational, what you want the outcome to be. And I'm hoping that that's the process that takes place. And not for the sake of JPMorgan, for the sake of the United States of America competitively in the world.
Well, you talk about a bank going down. Does that mean the FDIC should be subsumed in the OCC, or do you?
I think the FDIC should be run by the banks. Now, you may not know this, but when you talk about the government bailing out these companies, the FDIC is bank money.
Yeah, you're talking about the
JPMorgan has
deposit
put
insurance
something like $20 billion into the FDIC in the last 10 or 15 years. And when Silicon Valley Bank went bankrupt, it cost us $4 billion. Okay, it's our money. It's a mutual insurance company with a moral hazard where it's used politically as opposed to now. If you said, Jamie, you guys, the banks can run the FDIC, we'd be much tougher in some of these regulations. Like, much tougher. I mean, you think we want to bail out all these banks, and they were taking extraordinary interest rate risk, which I would never allow, not only not allow a bank to do it, I wouldn't allow a part of my company to do it. And that was overlooked by their regulators. I mean, staring them right in the face. They overlooked it, so busy on other stupid shit that they can't possibly, see it. So that's what we're talking about, that run these things properly, you have a better system. And then maybe one day we'll have a system where, we should somehow have a system where a bank goes down, you know what, you don't have to worry about it. And so.
Yeah, well, we will see if that day comes. On the proxy advisors front, I wanted to ask you just about, talking about retirement security and investments, and just kind of what are the levers that get pulled on some of these decisions at corporations that can have some sort of reflectment on their share price, on what they do next. And you've talked a lot about the influence of proxy advisors like Institutional Shareholder Services and others. They've gotten a bit in the crosshairs of some of the Republicans in Congress.
But ISS?
Do you think they had looked at, investigating them? Are you?
They're in the crosshairs.
Do you think that they should just disappear?
I think they should be no, first of all, any one of you who uses them, shame on you.
I thought you were.
I mean, shame on you. Okay, they first of all, ISS is owned by a German company, Deutsche Börse, And Glass Lewis is owned by a Canadian private equity thing, okay? They are incompetent. They are owned by the NGOs. And there's a big problem we have, which I'll go back to them in a second, which is a far bigger problem. We've gone from, I'm going back like 20 years now, 8,000 public companies to 4,000 operating. And private equity in the United States has gone from only 1,000 to 10,000. So I'm not against private equity, and I'm not saying it's got to be, but it should have been a lot more public. We are driving companies out of the public markets because of litigation, regulation, reporting requirements, cookie cutter, how we want boards to be cookie cutter, excess regulations, shareholder meetings which are frivolous, like people they get a kick out of when you have to listen to shareholders on their beef on their own particular thing. And I'm not against shareholders having a point of view. I'm not against any of that stuff. It's become outrageous, and we allow it. If you become a private company, a lot of that stuff disappears. So most companies I know, including yours truly, would rather be private. And again, and I'm asking a different question. Is that what the United States of America should want? Okay, and the ISS and Glass Lewis have been a huge part of that disease. Our people in JPMorgan Asset Management are no longer allowed to use them at all. By the way, you have to enter your votes through them. And when you enter your votes through them, because they're the pipe-weighted votes, they show you what they want. And there's a button, you can default to what they want. But we have told them, we want that taken off. We'll use the pipes. You got to take it off. They're not allowed to use it. They got to make their own decisions. And when people say to me, well, we don't have the ability to look at all those proxies, that's bullshit too. Right? That's just typical corporate BS. There's only so many proxy votes that matter. People can read them, and you can outsource your votes if you wanted to. If, like, for some reason, Larry, in some cases, is not allowed to vote the shares, he doesn't have to outsource ISS. He can outsource it to a lawyer he trusts. And so I think people should take a long, hard look at these two things and get rid of them. And then there's other things. Their numbers are wrong. They don't have to correct it. The former SEC made them correct it. This SEC said, you don't have to do it anymore. And they also, you can hire them to improve your ISS scores. Really? Wait, come on, folks.
It's a bit of a...
When are we going to kind of grow up?
By the way...
So they should be gone and dead and done with.
Before Jamie came on, he told me he was told he wasn't allowed to swear, but...
Whenever I walk on stage, someone whispers in the ear, no swearing, be a statesman, no swearing, be a statesman. Both are hard.
I think this crowd still thinks you're a statesman. But speaking of, I guess, swearing and things that you said under those circumstances, the anti-DEI activist, Robbie Starbuck, has gone after JPMorgan and various other companies. You had said recently on CNN or CNBC about them, bring it on. You've also talked, though, on the other side.
Again, I did say that, but if you look at the whole thing, I said we think we have the proper rules and requirements and things like that. And if there are disagreements you don't think are right, bring it on, but let us know. And that way, every now and then, people tell us about something, we're wrong, and we correct it. But we believe our DEI is proper and legal, okay? We do not have quotas. We do merit hiring based upon your brains, your heart, your soul, your capability, your background, your stuff like that. And we reach out to all different communities around the world. That's what we do. And we are very commercial. It's good for the long-term health of the company. We hire and train people, and we're quite comfortable where they are. If someone does have a specific thing, and I do think people, there are things people did that were overdone, well, fine, then bring it up, and we'll maturely look at it and decide what we need to do about it.
Yeah, so you think there is a place in corporations for DEI programs, for ESG?
Well, ESG, I don't know what ESG. We've been talking for years on the climate side, how misguided most of it is. And it goes back to this thing about binary thing. Are you for or against climate, for or against fossil? That's not the issue. You have one of the most sophisticated supply chains in the world, and that, if you want to reduce CO2, reduce coal with gas today. And then it's more than that. If you don't build the grids, you're not doing anything. If your Tesla is being fueled by a coal plant that makes electricity, you haven't done anything. And so these things are very complex, and there are things to incent to get done right. So we're in favor of improving the environment. I'm not in favor of wasting shareholder money with virtual signaling that's going to cause, you're going to be reading for the next 10 years about the amount of wasted money in this stuff. You think you had one Solyndra, you're going to have 100 Solyndras. and we didn't do it right. And I hope we go back to the drawing board and say, if you want to accomplish, how do you go about it? And a lot of the big companies, by the way, that get accused of are going to be the best at reducing some of these climate change and stuff like that. So, yeah, of course, there's a place to do all these things properly, but they get blown out of proportion. The work doesn't get done. It's unfortunate because we could do a much better job.
Yeah. Well, in our few moments remaining, since this is a conference, no, I wasn't going to go there actually, but I wanted, since this is a conference about retirement, I wanted to ask about your own, if you wanted to make any news here at all.
I have set my date. The date is 1 year after Larry Fink retires.
All right, you heard it here first.
Which means I'm safe.
Thank you, Jamie.
Thank you, appreciate it.